You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockingest of tunes means it's time for the rockingest of shows. It's time for the option block. My name is Mark Longo from theoptionsinsider.com, and hope you guys are enjoying the new noon Central Time. It's been about a week or two now, maybe coming up on 2 weeks now, so hopefully you've got it digested into your systems. You know how to find us at our new time, of course, Monday and Thursday, noon Central, 1 p.m. Eastern. Same, everything else is pretty much the same. You can grab the Mixler link. That hasn't changed. The time has changed. The Mixler link has not changed. So mixler.com/options-insider, I believe, is the link, or you can just grab it on our social media. Set it once and forget it. A lot of you like to follow us on Mixler. You can do that too, and that way you'll be notified the second we go live, not just with this show, but for everything we do that goes out live, which is not everything, but a lot of things. So sometimes people, you never know who's going to wander through our studio here. We like to beam those kind of things out. Our other shows, maybe got Advisor Option coming to you tomorrow, and a lot of good stuff this week. So stay tuned for all that fun stuff. Mixler is the easiest way to get it live, or if you want to just get it delivered to your leisure, just stay subscribed to the network on the old podcast platform of choice. You'll be good to go. However you listen, live after the fact, you know we like to hear from you, so hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. I'm guessing we're probably going to hear from a lot of you this today, because whenever we talk about crazy Tesla, things start, you guys tend to respond in one way or the other. So I look forward to all of your myriad responses forthwith. But before we get to that, let's bring on everybody. Started off with, let's go out to the sleepy hamlet of St. Charles, where we are joined by Uncle Mike Tussaw from St. Charles Wealth Management, a.k.a. the firm with the fox. Mr. Uncle Mike, welcome back to the show, sir.
The firm with the fox. You have so many great marketing ideas, Mark. You should do this for a living.
Yeah, you know, I'll send you my invoice in the mail. But, you know, now you can't get rid of the fox. It's part of your brand identity.
It kind of is, isn't it?
Uncle Mike, a.k.a. the firm with the fox. Check it out, stcharleswealth.com, to see what the heck I'm talking about all the time with this crazy fox and everything else he's got going on over there. Then we go a little farther out. They don't have any foxes, but maybe they have other. They used to have a cool, weird guy on their homepage. He's gone now, too, so I don't know what they have. Let's go pull it over. It's Mark Sebastian, a.k.a. the Greasy Meatball from OptionPit.com. Mark, the crazy guy's gone. What do we got to replace him?
He is the crazy guy.
Hey, good to see everybody here. It's good to see all the craziness. It's a great day. It looks like it's about to rain cats and dogs outside. I don't like that so much. But, yeah, it's a beautiful day in the neighborhood.
I was just pulling up your website, and I typed in something completely incorrect. So, Option Pit with 2 P's, by the way, listeners. Don't go to it. It's just bad stuff. All right, here we go. Option Pit. Yeah, so you don't think I missed that guy. He was kind of fun. So head on over to optionpit.com. Maybe they'll bring him back. Meanwhile, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, hitting all kinds of buttons over here, but there we go. We got it going. Welcome to the trading block. This is indeed the portion of the program where we do pretty much what we like to do here, which is different now because we get to do it live during market hours. Before, it was all post-market. And as we're recording this and streaming this live a little bit past noon central here, on Monday, August 20th here. We're seeing kind of another mixed market. This is kind of the norm these days. One index going one way, another index going the other way, all kind of doing their own thing. The Dow leading the charts to the upside, up nearly 0.5%, about 0.4%. The S&P kind of playing Goldilocks today, only up about 0.25% or so. And the tech-heavy NASDAQ taking it on the chin, off about 0.25%. And VIX also taking a break. The VIX cash off about 1/10 of a handle, so right around 12.5 level out there as we're kicking off showtime here. Had a bit of a range, had about, looks like about half a handle range intraday at VIX cash. So kind of interesting day, kind of a sleepy day, a weird day. Not sleepy out there in the name of certain names. We'll get to those in a minute, but first let's go around the horn, see what everybody has on their radar. Uncle Mike, we'll start with you, sir. What is catching your eye today, sir?
Well, we just keep teasing with these all-time highs again. We're not there. We're roughly maybe 9-10 points away from a new all-time high in the S&P. So we're very close. It's like we're tilting the pop machine, and it keeps going back and forth. And then at some point, I really believe the pop machine will tilt over. But at this point, it is not as yet. But we continue to try to do it. At least the market does anyway. In terms of individual names with which I'm watching, it is kind of a sleepy day today, all around. At least in the in my world anyway. And my shiny stuff, gold and silver. Silver is down 9 pennies. Gold's up roughly 40 cents, so not a lot of movement. Pretty broad-based in terms of the sectors that are rallying today. The only real name that's really sticking out to me right now, and the things that I watch, I mean, I know we're going to talk about some other names, but the things that are kind of in my world, Merck. Merck is not being a jerk today. Merck's actually up 1.5% on the day, so got a little action there. But other than that, really not a lot of movement going into the noon hour.
Merck, let's see how they're looking here. Good old Merck. We haven't talked about them. I'm trying to think. I haven't talked about them in a while. Ticker symbol, of course, listeners, MRK. $70 today, up about 1.5%. Is this a strategic night holding, sir?
This is a triple income holding. This is one of our wheel stocks that we're doing things on. Yes.
Ooh,
I love me the wheel.
Juicy.
And triple income.
I love all three legs of the income there. Yeah.
Yes.
Anything you can relate to us in terms of where's your put strike and all that good stuff these days?
Yeah, right now with Merck, where we are, we were short the SEP 65, so later in the day we might be taking some action on those, but we will see. But at this point, that's probably the main thing that is pharmaceuticals. So I guess just another couple of other names, just as I'm kind of going through this. Johnson & Johnson is up a little bit on the day as well. That's kind of one of those stocks that really got the crap kicked out of it a couple months ago and is gradually coming back from the dead. So it looks like the market likes some pharmaceuticals today.
Does seem that way. Mr. Meatball, same question for you, sir. What is catching the old eye in today's kind of weird mixed action?
Yeah, there's some funkiness. Apple got really overheated. And, take a look at, one of the things, what do we always talk about? When a stock is rallying and its ball is rallying at the same time, is that a good sign or a bad sign? It's a bad one. And, Apple vol was pretty flat all the way until this last leg up from 210 to 220. And if you look at that candle, it's pricing itself for a nice little turnaround back to 210. I'm also noticing that Tesla vol is completely off the chains high. I mean, craziness abounds in how high it is. And I can't wait to talk about what happened with those par puts and how that open interest has reacted. And then I think finally the interesting piece is Goldman, right? News is out today. They're going to eat $63 billion from Venezuela, and the stock's up almost 1%. So you explain that one to me. I don't understand it.
Market may have expected they had more exposure to Venezuela.
That might be it. I mean, it literally could be.
The market's liking the fact that they're making a customer whole. They're taking one on the chin because they love their customers and their clients that much. It just shows Goldman's commitment.
That's Goldman all around.
Yes, that's just Goldman's commitment.
What they're known for.
Making the customer whole and happy regardless of the impact it has on their balance sheet at the end of the day.
Or maybe they know that Goldman's really short a bunch of it too, and somehow
they probably have it somewhere else.
They got it on somewhere. Chances are. Oh, how deeply cynical we have become here on this program. But you invoked them, Mark. That means we have to talk about them now. I'm talking about, of course, our old friend, the Teslas, the T, call it what you will. This freaking stock, it's like a soap opera unto itself. You literally could do a show every day about the crazy freaking drama that is going on in this stock. Let's just run down some of it today, shall we? Because literally, we almost need to have our own show just about this. This Tesla stock right now, shy of the 300 handle, right about 299.80 or so. Excuse me, off about 5.5 handles. But that kind of belies the crazy volatile day it has already had. It's had about a 20 handle range on the day. Got up as high as right about 308, sold off to 288. So just moving and shaking all over the place. A lot of that drama, a lot of that volatility coming from an analyst slicing their price target. Get this, from $308, which these days seems comparatively sane, I guess, for Tesla, to $190. A big change. And the reasoning for this, they claim, the reasoning for this is our interpretation of subsequent events leads us to believe that funding was not secured for a going private transaction, nor was there any formal proposal. So that one tweet, apparently in the subsequent brouhaha over that going public funding secured, that apparently had some impact on this analyst's fundamental analysis of the cash flows and revenues of this company. Enough so that he cut it by not quite 50%, but a pretty decent chunk. This is not some scrub. This guy's name is Ryan Brinkman. They say, according to people who track these things, we kind of tar all analysts with the same brush, which is don't pay attention to them. Pay attention to what the market's pricing in. But that said, if you like these people, they say he's one of the higher ranking analysts on Tip Ranks. He's number 353 out of nearly 5,000 analysts. So he's kind of up there. He has decent success rate, 64%. Average return of 13% for whatever that means. But he has historically given poor recommendations on Tesla stock. Go figure. So that apparently was the catalyst for, obviously it doesn't take much to set Twitter and, or I should say Tesla and Twitter ablaze about Tesla. And that's kind of what happened today with this crazy 20 handle range. We're seeing, about nearly 250,000 contracts. So pretty much a full day's volume on the tape already as we're going into the noon central time here. Puts leading the dance about 1.6 to 1, about 150,000 of those and about 90,000 of the calls out there, which not surprisingly, this thing's kind of been all over the place. We'll get to our other friends, the mystery puts, in a little bit, but that's not even the end of the drama, listeners. I haven't even scratched the surface of the drama here. On top of that, now we have the notions of all the will they, won't they, going private. How's that look now? $420 a share. How's that price look? Do you think the Saudis want to pony up 420 right now? I'm guessing probably no, but that might have to be revised down a little bit. The free call to the upside everyone was saying Tesla, you had in Tesla at that 420 level, maybe not quite so rosy. But on top of that and all the SEC investigations into his claims that he had funding secured, now there's more whistleblower reports coming into the SEC about massive theft going on at the Gigafactory. One of these whistleblowers claimed that from January to June, $37 million of copper and other raw materials were stolen from the Gigafactory, and that was hushed up, which is why this person was fired. They also claim that the DEA has a massive investigation into the Tesla Gigafactory because there's apparently a massive narcotics ring being run out of the Gigafactory that involves the sale of significant quantities of cocaine and possible crystal methamphetamine on behalf of a Mexican drug cartel. So
meth lab.
It just keeps on giving. I don't. The news around this company.
This is insane.
This is like a bad Mexican telenovela just made to life and brought as a company.
I've never seen anything like it. I mean, what in the who's it?
I don't know how you even interpret. You say the vol's high, but how could the vol not be high with this madness afoot?
So. What I want you to look at is take a look. When I mean the vol is high, pull up instead of like the really near dated vol, pull up 90 and 120 day vol up on your LVP there, and I think you will be shocked on a 2-year scale how high things really are. Go back to now on I think LVP you can go even further back now, but go as far back as you can. You'll see how high kind of intermediate vol is. relative to where it's been even recently.
And looking at October now, we're at about a 90 for OI at the money implied, obviously out there about 90 days. I'll have to go out a little bit farther out to check.
Yeah, so there's some true nuttiness if you look at a chart of some of those kind of normalized IVs. It is higher than it's been in the last 2 years at the 90-day level, that by at least 10% or 20%. I mean, I've got it a huge. I've got it 7 full percentage points higher than it's been in the last 2 years, and only that big dip. And the only time it's even come close is when Tesla dropped from 300 to almost 240 in a couple of days. So there is something crazy.
Yeah, I think something crazy kind of just summarizes the whole thing.
Something crazy, and it rhymes with Elon Musk.
Yeah, he's tweeting at 2 a.m. to to Ariana Huffington that he's not crazy, but that he needs to be at the factory.
He needs to back off the Ambien.
And people tell him that you need to stop doing this. You're crazy. You're working yourself to death. All this other nonsense. Go see your kids for a minute. All this other nuts. It's endless drama. All this a long way around to saying this is a core holding of the strategic night, right, Mr. Uncle Mike?
It is not. It is not.
Might get decent income on the puts, but you're probably gonna get those puts put to you pretty quick, I would think. So I don't know if you got that day like today, 20 handle range. That's not part of the triple income strategy either.
It is not. It is not. Not nothing with Tesla, but it's makes for very good material for the show. And maybe what we should do is start viewing this as maybe like a marijuana stock or something, because maybe they have that drug cartel going on in the plant in case they legalize drugs, and that way they'll be the innovators of it. Cocaine in cars.
Yeah, apparently. I don't know. Austin Richard, who's listening, says the only real story is the false press release, which will in turn squash any private financing. I'm not sure what press releases. Maybe he's referring to there was a release about the financing secured. Maybe there is. I don't know. I didn't see that.
I mean, who would loan him money? This is the same discussion that we've been having. Who in the world, on top of the fact they have a massive cash burn, you now have proven that your CEO is a crazy person, or at least maybe not a crazy person, but not an actual crazy person, but I would say slightly unhinged. Why would you ever loan them money? Ever. It's just throwing good money after bad. And there's a reason why. I mean, Mark, I know we love talking about these Jan par puts, and the Jan 50 puts. The Jan par puts that everybody was long, that they were buying them for all these different prices, they're now almost $5. They're $200 out of the money. These are the. I mean, if you look at these, these were $1.65 a few weeks ago.
Yeah, let's just get into it then. We'll save the rest of the puts.
The skew on these are off the charts high from where they've ever been in the last, few 6 months.
Yeah, we're seeing a huge ramp. Let's just get into it then. Let's get into our mystery put talk and a bunch of other fun stuff. It is time to unleash the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that funky tune means it's time for the funky portion of the show. We're going to get funky here, so roll up your sleeves, listeners, because it's all funk all the time when you're talking weird, far, crazy, out of the money, crazy mystery Tesla puts here. And oh my, as Mark was just alluding to, oh, have they been active? Oh, have they been lighting it up? And let's just start with our old friends, the ones that kind of kicked it all off. The Jan 2019 50 puts. This is the one we first noticed over a year ago now. I forgot. I'll have to look at the exact date, maybe like a year and a half ago. And we said, wow, this, you do a basic search for the top positions in Tesla, and this one blows everything else away. How strange is that? And so we started doing some dig. First, I first saw it, I thought it was an error. And we started doing some digging into that, and it's unleashed this whole fury that's kind of become a staple for the show now. I know our friends at Reuters and others have run with it since then and digging more into them. But this is kind of the put that kicked it all off. And as we're speaking right now, these things have been moving. We were talking for a while. They were about 70, 80, 90 cents. $1.50 at $1.62. So that's kind of what that Vega impact, that skew that Mark was talking about earlier, kind of just kicking into high gear. These things are up almost 50% since about a week ago on these puts. So yeah, you don't need a delta sometimes for these things to move. 10,621 of these on the tape today. I'll have to check. Might be the biggest day we've ever seen for these mystery puts. I'll have to do a little bit of digging here. An open interest of 62,702 now. Hopefully someone taking a few of these off, because I'm guessing they put these on at better levels here today. But you never know. Mr. Meatball is also alluding to the par puts, the 100 puts. These are, literally, as we speak right now, exactly 200 handles out of the money puts. These things are threatening $5. They're about $4.70 right now. And they, let's see, what were they trading? Shall we say? Let's just look to last week. Well, they were trading. Yeah, they're up. They've almost doubled as well. They're trading about $2.30 at this time a week ago. So, yeah, just craziness. 2,500 of those on the tape on OI of 35,765. 1,100 of the 20 puts going up. These are all just straight up Jan. It's not even Jan 2020. This is Jan of next year. Those are trading for 35 cents right now. 18,260 open there, and even that's not far enough for you. About almost 600 of the 10 puts. Again, regular Jan 10 puts, which are trading 12 cents at 14 right now, and there's nearly 16,000 of those on the tape. Mr. Meatball, I know these have been fun to watch, but this is just crazy town paper, is it not?
Yeah, I just as a lark, I bought one of those par puts for like $1.65 a couple of weeks ago, and then I'm looking at them and I'm like, are these really for almost $5?
There you go.
I gave that.
There you go.
Our 1x, actually, who's done really well? The people that were smart enough to 1x2 that par 50 put spread are in fact doing really well today, because as the 50s were already crazy expensive. The pars were kind of relatively cheap, and I think the pro paper was taking advantage of that, and now we've seen that kind of that mid-tier skew that not the ultra one, not the one delta puts, but the stuff that has a little bit of a meat to it. Call it 3 to 15 deltas. That's where the curve has really, where Vega's really picked up these options. It's downside skew is just ridiculous, and I've not seen this kind of. I mean, the curvature is just bananas.
So you're saying you're ready to retire now off of your one lot Tesla puts? Is what you're telling us?
$230 I made, yeah, or whatever.
Hey, $4 or so one time is better. It's better than losing $4 one time. Whatever, $3.
It is. It'll buy me a Nintendo Switch.
That will. There you go. Give it to little the little man there, and
he already has one. And he's super excited for Smash Brothers. How about you?
There we go. My little guy's excited about Smash Brothers as well. It seems like it's a universal thing. Who doesn't like a good Smash?
I'm actually excited about Smash Brothers myself.
Who doesn't like a good Smash every now and then? It's good for the soul, I think, out there. Let's see. Let's go out a little bit farther.
A good Smash is good for the soul, folks. You heard it here first.
That could be our tagline here. A good Smash, good for the soul. Let's see if the farther
we
out.
have a title for the show.
Yes. Either that or just Tesla is effing crazy. We can put that as a title too.
I don't know. Good Smash, good for the soul. I like as a title.
That applies almost every day of the week for the Tesla thing. Let's see here really quickly if the farther outputs are getting any action. Spoiler alert, yes they are, listeners. So if you thought January of next year was a little bit too soon for all the craziness to really come home to roost, you want another year or so for that to kick in. You're not alone here. The Jan pars in 2020, the puts doing 700 some odd on the tape today, nearly 25,000 open there. The 50 puts doing about 350 on the tape, 26,000 or so open there. The 2020 20 puts, say that 5 times fast. 2,265 of these bad boys lighting it up today. These things are trading for $1.50. So Mark, you could sell out your par puts and buy these 2020 20 puts one time and then go back to your original price and pocket.
Well, how could I lose?
And still buy a switch, keep that money rolling.
There you go.
Keep the dream alive. Nearly 15,000 open on that strike and 1,000 of the 10 puts in 2020. So these things trading 50 cents. 1,075 times today, nearly 4,000 on the tape. So, yes, the answer to all that questions you've asked us, are these things? Yes, they are trading, and they're trading en masse, and just for just crazy levels, crazy skew, crazy vol, crazy all of it. Tesla be crazy. That could be our headline for the day as well. But that's kind of like, unrest in the Middle East. That's just a day that ends in Y. Something crazy is happening at Tesla. Let's move on before we go Tesla mad here on the show. We're going to do more. These kind of earlier shows are kind of fun because they give us a chance to dig through our back catalog a bit and see kind of some trades that we highlighted before and kind of see how they're playing out. This is good because we had actually a lot of trades we had marked as they need to be watched and analyzed, and we're getting a chance to do some of that right now. Let's see how we do. We got 3 coming up. Let's see if 3 go down making money or not here. Listen, let's start off our first trade we highlighted back on July 16th, a little over a month ago. This was in QEP Resources Inc., ticker symbol QEP, appropriately enough. This was a trade at the time on the This was on the 16th of July. We thought it was someone being kind of stubborn, quite frankly. I think we kind of mocked him a little bit. We saw someone rolling the July 14 puts 11,000 times and rolling them out 11,000 times to SEP, keeping the same strike, doing it for a 17-cent debit. They're paying $227 for the SEP puts, selling the July puts for $210. So it wasn't a huge outlay. It was just more like seemed like this person was really kind of being stubborn. Looks like they had kind of rolled this before, and like this person keeps rolling, but clearly they're concerned about something out here. And now looking in hindsight, we take that mockery back. The stock today $9.41. So that 14 strike looking like their concerns were perhaps well founded at all. As the stock was around $12.50 when this trade went up, so those puts were already in the money, hence that kind of meaty price tag. But they kept that. That's another thing. We thought that was weird. They were keeping that 14 strike. You think you could roll down and actually maybe, pocket a little bit of that difference, go down to the 12 strike or something. But they kept it 14. Another reason why we thought maybe they were being stubborn. They were stuck on that strike and they wanted to wait till that to pay off. If that's the case, then it happened. The stock plunged not too long after this trade on earnings. It dropped another buck to $11.50. Continued trending down another 2 handles over this course of subsequent weeks and months, getting down to about where it is right now, right around $9.50 or so. But this guy did not wait. Unlike so many of our other people we've highlighted here, who they see a good trade go and they kind of goes their way and they get greedy and they wait and the thing ends up going away on them. This guy took his money and he ran the hell out of the door. We saw these puts closed on the 31st, so a couple of weeks after this trade went up. We saw 16,000 of these going up when the stock was $10.39 and the puts were trading for about $3.60. So on this trade, and he ended up being up because he just on the price he paid for the SEP. Forget the roll and everything else. He factored in the roll. It's a little bit different, but on the SEP contracts, he was up about 1.4 million, I should say, about on the initial 11,000. Worth noting, he did another 5,000 the next day for a different price, around $2. So if you add in the total of 16,000 that he closed out on the 31st, he's up a little over 2 million, about 2.2 million on this trade. So I don't know, Mr. Meatball, not a bad one. Seems like we're 1 for 1 so far.
Yes, he did pretty well on this one, didn't he?
This is not a name we talk about very often here on the show. This is an independent crude oil and natural gas exploration and production company. Is this a core holding of Carmen Line, sir?
No. We do not, trade by appointment names are not really what we deal with at Carmen Line. We're mostly S&P and VIX and VXX.
But I know as someone who
notably some VXX 10 puts for a penny.
Yes, you got a few of those, maybe 1 or 2 or 10. But yeah, I know you like to counsel your mentees that a hedge is only a hedge when you take it off. And we should mention that this guy could have been long a ton of stock, in which case maybe he isn't the happiest camper in the world. But from an options perspective, it worked out. And this guy did it right. He took it off.
The hedge worked and he took his money. That's what you're supposed to do with a hedge.
I mean, I can't tell you how many times we've seen on this odd block. They worked out so well. They did a crazy strangle or whatever, and it worked out. And then, spoiler, they didn't take it off. And we might have, spoiler again, we might have one of those coming up a little bit later. We shall see. Let's keep on rolling right now, Mr. Meatball. So far, listeners playing the home game, we are 1 for 1. Someone sitting on some cash here. Again, options-wise, stock-wise, probably not, because he wrote it down. So maybe at the end of the day, not the best, but purely options. That's all we can really analyze here. At least easily, then looks like he's up on that one. So we'll figure that a win. Make it a nice, happy, cheerful day here for everybody. Let's keep the positivity rolling after all that crazy Tesla nuttiness. Let's see. We got Flower Foods Inc. This one was brought up to our attention on the show back on the 5th of July. Ticker symbol FLO, FLO. Let's see, closing today, $20.72. We looked at it over a month ago. At the time, this was more put rolling. This was rolling July 20 puts for 16 cents out to the Aug 20 puts. Again, keeping that same strike for 65 cents. They're doing the whole thing for about 49 cents or so. And then it did about 4,000 times. And it seemed like this guy was had some concerns, and he was keeping those concerns alive, keeping his hedge alive, or perhaps his downside spec. Whenever you see size at the money puts like this, I usually tends to lean that it's someone hedging something, but you never know these things. Total of about 4,000 trading. And let's see, looking back on the chart of FLO, it seems like, unlike our other friend whose concerns became well-founded, this time, not so much. Well, I take that back. The stock did actually have some tumult. Earnings were on the 8th, so this trade included an earnings cycle here. And the stock on the 8th went from about $20.80 down the next session to about $19. So it had about a $2 move or close to it, selling off to the downside. And so it looks like this guy's concerns may have been well-founded. And of course, the stock rebounded almost immediately in the next couple of sessions, and about a week later, it was back up to about $20.50. So it was kind of a near-term blip. This kind of gets back to what we were just talking about with the meatball here, about if you got a hedge on something, maybe you might want to take it off, because it looks like this guy did not do that, and that could have ended up costing him some cash. Looks like the stock closed on expiration here on Friday, this last week. It closed at $20.63. These puts went out worthless, and going in 6,000 plus, 6,600 of these things were still open on that strike going out on expiration. So it looks like our friend had these things. I haven't had a chance to dig and see how high they got, but probably higher than 65 cents is a pretty good guess. So he had a chance to take these off, and he didn't, and they went out worthless. So it looks like we got one winner and one loser. Mr. Meatball, a pretty clear example here of not following the option pit maxim of close off your hedge.
Correct. You got to take your money when it's afforded you. And, and hopefully, the idea would be you do it with the stock if you're hedging, but, who knows? It's like, why bother to hedge if you're not going to take some money and roll it or, roll lower? You can stay hedged and take money off the table. It's not hard it's called a roll down, and people do it all the time.
Yeah, our friend here did not do that. At least if he did, he left 6,600. Easy for me to say. 6,600 of these things open on the strike. So I'm guessing probably not. And they went out.
Probably not.
So unfortunate. So we're 1 for 1 here. This guy needs to subscribe to the Option Pit channel. He could learn how to win.
He can learn all sorts of stuff about hedging and things like that.
How to buy puts, and more importantly, how to sell them when they actually work out your way, which isn't all the time, listeners. So that's the time you want to hit it. All right, last up, we're going all the way back to May 21st of this year. This is a funky one, Mr. Meatball. So take a look at the show doc, because this one requires all sorts of it's fun, shall we say? This is we're living up to our name here of the odd block here. Let's look here. All right, so what we got here? We got PayPal. And what we talked back then, even back then, it was kind of funky to us. We weren't really sure what the hell this guy was up to. We had to wait till the OI numbers to come out. Now that we have that, we can look at it a little bit more certainty. But this is back on May 21st. We saw kind of a funky call palooza, you can call it, in PayPal. It looked like at the time, Paper was selling SEP calls and October calls and then buying a funky stupid in August. all in the call side, all in PayPal. And it was kind of a bit of a head scratcher. At the time, it was paper selling, let's see, about 14,000 of the OC75 calls for nearly $10, $9.75, and selling, excuse me, about how many? 14,000 of the 72 halves, so same level, for about $11 or close to it. And then looks like they were buying opening on both AUG legs, about 14,000 of the AUG 72 halves. And actually, no, I take that back. More, they did 7,000, so nearly 20,000 of the AUG 72 halves, and about 14,000 of the AUG 75s as well. Doing the 72 halves about 1040, and the 75s for 860. So a ton of freaking contracts was the moral of the story, and it seemed weird. We don't see a lot of spreads like this, where if it was indeed initiated at the outset, opening all of it, then, which it wasn't, because you could tell there was OI, so it was kind of hard to tell. But if it was initiating, you don't see a lot of people buying the near term and selling the far term like that, let alone in a staggered kind of calendar. Usually the calendars are kind of done the other way, take advantage of that near term, decay they get, and then they like a cheap or even free longer leg once that near term expires. So seeing it going up this way was kind of weird. Seeing it going up with 2 months, September and October, and then also two funky straddle, or excuse me, stupid legs in August. The whole thing was weird. So fast forward a little bit. Now we have a little bit of the legacy of hindsight and the benefit of hindsight to help us analyze this. It turns out, it looks like that was closing on the October and the September. So they probably had something on that it seems like it had gone their way, because at the time the spread went up. The stock was $82, so on May 21st. So those legs are already in the money. So chances are paper was maybe sitting on a little bit of cash. They also did more contracts in August. Also a good sign that perhaps they're sitting on some house money. And then interestingly enough, they kept the same or similar strikes though. Even though the stock was $82. That's another thing that was weird. They kept the strikes in the 70s, which again is a strange choice. You don't usually see that. People rolling. If they were rolling, they're rolling longer term stuff, closing that out, rolling to nearer term stuff, same strikes. So they're still meaty contracts. The whole thing was just strange. And now looking at it here, looks like this was a pretty well-founded roll. They may have taken their money on the OC and the SEP. They rolled into near term, which, as you know, has got a lot more gamma, a lot more bang for the buck when things happen. And things did happen during the duration of this contract to the tune of about, 2 months later. It had to wait a little bit. But the stock rallied to about 92.35 on earnings on the 25th of July, and then promptly sold back off to 82 a couple of days later. It's another time where this is like a quick blip. You got to take it while you can get it. This is another one where the digging makes it a little hard to see exactly what the end result was on the AUG side. Looks like the AUG calls, 72 halves, were still open going into earnings. So those ones could have done well. Looking here at the analysis of the AUG calls, their big trading day, 72 halves, was back on the 21st of May, and they never really traded for that much size ever again. So that is possible those bad boys went out. The 75s, though, looks like they were closed. They traded about 14,000 times on the 21st. We saw big chunks, about 6,000 going up on the 6th of June, another 6,000 so going up on the 14th of June, 3,000 on the 7th of June. So it seems like they got taken off piecemeal. By the time those were done, the OI was pretty negligible after that. So it seems like, again, another weird leg to this weird trade. Paper took off the 75s actually before the earnings, about a month after the trade was done, left the meteor 72 halves open, and as far as I could tell, never closed those. So they were sitting on a gold mine of 72 halves. And again, we'll need to look and make sure 100%. But it seems like first blush, they may have never closed the AUG 72 halves. So Mark, I defy you to make sense of this one. There was a longer term calls, a time stupid in October and September that seemed to have worked out for them. They closed that, rolled it into an AUG vertical stupid, which also worked out for them, but then they only took off one leg. I'm
going to go out on a limb and say this was connected to some sort of structured product for a customer or something along those lines. That's the only way I can kind of come up with what's going on here, is that it has to be related to something of that nature.
Even still, they still left. It seems like they left a lot of money on the table, which is odd. you think someone would tap you, hey, by the way, those AUG 72 halves are going out right now. And maybe they wanted the stock. That could be. And then they probably got it if that's the case, because those things were 10 handles and change in the money when they went out. But still, you're still leaving money on the table if you do that. So, yeah, I don't know how to classify this one, listeners, really. This is still a weird one. It looks like they were winning in the beginning, then maybe not so much. So maybe they won, maybe they lost. If they took off those AUGs, all of the AUGs, then they definitely made money. If they didn't, then at least on the options side, again, there's other legs, obviously, to this thing going on. OTC, structured product, stock land that we don't know, we don't see. But I'm gonna classify this one as a tentative loser, in which case we got a winner, we got someone who missed the boat, and then we got someone who's kind of doing all sorts of weird nonsense that looks like it adds up to a bit of a loss, but we don't know for sure. So that's kind of a mystery. So we're kind of, I don't know, Mr. Meatball, not too bad. We're 1-1-1 on that one.
Yeah, 1-1-1. Yeah, I guarantee you this was done. They made so much money on whatever created this trade. They probably weren't even worried about it.
Nice
That's
problem.
Gotta be it.
Nice problem to have, huh? Who cares about $14,010 in the money calls? Who needs those?
Correct.
Good.
Well,
nice.
They probably had to deliver something else somewhere else, or not deliver, and they don't want. There is some sort of margining thing to it. I'll bet.
That's true. They probably needed the stock so they could deliver it to something else. So there's all sorts of other wrinkles and legs that we don't see.
It screams of a structured product.
Screams of weirdness. Maybe not quite Tesla weirdness, but weird nonetheless. So 1-1-1 here, listeners. I like these look back ones. They're kind of fun. We get to see what people are up to. Again, proving that size money, not always of the smart money. Let's see how smart you guys are. It's mail block time.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, have at us. You guys know how to get at us. At Options on most of the major social media platforms. On the website, you can use the feedback form. A lot of you like to do that. Or just use the old-fashioned email, questions@theoptionsinsider.com, or hit us up live if you're listening live. And you, too, can get at us with your crazy, crazy comments and all sorts of fun. Tesla. I love Tesla. I hate Tesla. All that good stuff. Let's see here. What we got here? First off, let's pay off what we talked about last week. We asked you guys, I'd like to know a little bit about what you guys know about options. What's your level of options expertise? Quite simply, how would you describe yourself at the dinner party? A fancy soiree, you go there, you're sitting in your tux next to somebody else. How do you describe yourself to the person next to you in terms of options? Not anything else. I don't care what else you do in your life. Just about options. That's what we focus on here. So we asked you, would you describe yourself at the dinner party? Would you say you're a current or former options professional? Market maker, trader, broker, something like that. Are you a retail options whiz? So you got your screens open all day long. You're slinging, you're wheeling and dealing 50, 100 trades a month kind of thing, active on, whatever your platform of choice is, TOS or IB or whatever. Or are you more of a retail options dabbler? You get in, you get out, you do some stuff, but you got a life, you got a job, you got other things you got going on as well. Or are you looking to get started in these crazy options things? Mr. Uncle Mike, sir, how do you think this poll ended up, sir?
I think it's going to go for the dabblers. I think people believe themselves as dabblers because I think we have a very humble audience, even though I think they're more than dabblers. I am going to bank on the humility of our wonderful audience.
You wagered on the humility. I believe that was your pick last week, too. You wagered on the humility of our audience, and you were proven correct, sir. 47% describing themselves as retail options dabblers. That kind of surprised me. 22% saying they're looking to dip their toes in these options and looking to get started. 18% said they're retail whizzes, so they're on their screens all day. And 13% coming from the pro side of the space, current, former pros. I get that too. It means volume-wise, there's just not as many of us as there are out there on the retail side. So that makes sense. But I was surprised at how many dabblers are floating around. So Uncle Mike, you have deep insight into our audience, sir.
I am one with our audience.
We also asked you guys last week. You guys did pretty good on this one. I gave you a flash poll going into vol views. We wanted you guys to play along with us. We embarrass ourselves every week on the Crystal Ball. Time for you guys to do it as well. We asked you where VIX is going to be at the time of that segment, VIX Cash. So right around 1 p.m. Central on Friday. We made it easy for you. We gave you ranges. We said 12.5 to 12.99, 13 to 13.49. That range, by the way, would come back to bite us. 13.5 to 13.99 or 14 to 14.5. So we made it nice and easy. Gave you half a handle ranges. And you guys did really well. 30% said 12.5 to 12.99. 30% was 13 to 13.49. Wouldn't you know it? Right at the time that segment was going on, VIX cash was at exactly at 13. So I was charitable. We kind of split evenly on those two. I gave both of you the win, even though technically 13 was only in that second column of 13 to 13.4. That was nice. You guys were good. I gave it to both. 24% saying 14 to 14.5. So 16% saying 13.5, 13.99. So our audience, however they describe themselves, you're a savvy bunch. So don't sell yourselves short. You're a pretty savvy bunch, at least when it comes to picking VIX. All right, this week we asked you kind of a timely one. I'm going to be talking a lot about crypto derivatives at the big Voice of Blockchain conference this week. If you want to check it out, by the way, come see us. It's going to be on Saturday at Navy Pier in Chicago if you're going to be there. It's on Friday, too. It's a 2-day affair, so you can check out Voice of Blockchain. If you want, it's going to be me. It's going to be Tony Saliba, a bunch of people, CME, a bunch of others talking all sorts of crypto on the panel. It should be a fun time. So come see us pontificate on this stuff. So we thought we'd ask you guys, in honor and that spirit of crypto, even though crypto is having some issues right now, which crypto derivatives product would you like to see listed on a major venue next? I'm talking about a real exchange we've heard of, like the CBO or CME or something with a real listed product, not some weird kind of implied option thing that's some crazy crypto venue. I know those exist. Don't get at me on those. I know those are out. I'm talking about a real product on a real venue that has real, regulators enforcing things, real margin, real backstop clearing, all that kind of stuff. So that's what we're talking about. We gave you 4 choices: good old Bitcoin options, or Ripple options and or futures. Pick your pick there. Or Ether options or futures. Take your pick. Or Litecoin options or futures. Or write in with your other thoughts there. Mr. Meatball, we'll start with you. What do you think is winning our poll here?
I'm gonna guess it's Bitcoin options, most because that's the most well known. Even though I think Litecoin and Ether are superior coins, Bitcoin is the name coin, and so it's got to be the winner.
I can see that logic. Mr. Uncle Mike, same question for you, sir. What do you think is winning our poll?
I think Bitcoin is, and as much as I would like to write in, like maybe for binaries on the Cubs versus the Brewers winning who's going to win the division, I think it's going to be Bitcoin as the winner as well, because that's the most popular one.
Yeah, so far you guys are right. 70% choosing Bitcoin options, 16% saying the Ether options and futures, and then 8% for Ripple. I thought Ripple would do better. That seems to be in a lot of people's minds, but not so much. 8% for Ripple, 6% for Litecoin. We'll see how those numbers change, but given the numbers, how the crypto market breaks down, roughly 80-odd% of all the notional going up right now is in Bitcoin. Kind of dominates the space, so not surprising you guys are. Personally, that's where I would like to be first, because that's where I'd want to play right now. I'd take Ripple too. I'm a fan of that one too. So I think because Ripple's so cheap, 27 cents, you could argue the options are perhaps moot on that one. Let's see. We got a bunch of people chiming in here. Let's go here first to the live folks. Kyle Michaels chiming in saying, I think maybe he's talking about the Tesla. I don't know. He says, you're paying a huge premium on puts, almost 3x what a comparable call is in some instances. Why not buy a few calls out of the money and see what happens? Great risk return, if you ask me. I believe we're talking about the crazy skew and premium on those Tesla puts, Mr. Meatball. So it sounds like he's saying if you're going to do that and you want to take a flyer, it's cheaper to take a flyer on the upside in Tesla. Yeah, I could see that logic. Certainly some people out there are doing that. They consider this $420 level that Musk tweeted out as to be some sort of sacrosanct level that the stock is going to go private at. If you believe that, then you're right. Some of these upside calls north of 300, this recent sell-off is like a gift to you. You can go out there, take your pick, 350, 320, whatever strike you want, and that's almost free money, at least if that deal comes to pass sometime soon. If you're not a believer of that, maybe not so Musk. So definitely seems like interesting idea. Mr. Meatball, what do you think? If you're scared off by the Tesla put premium, you buy one or as he suggests, maybe 3 calls instead.
Oh yeah, I don't know about that. I feel like the more you look at that 420 price, you got to wonder where that price came from, I don't. There's a reason why the premium is so juiced, and it's not because the stock is going to get bought out for $420. That would be the way I would kind of piece this into one cogent thought.
Isn't there some speculation that he was joking about some sort of, shall we say, cannabis-fueled price level?
Let's just put it this way, yes. We saw Canadian pot stocks explode when on the news, as much as Tesla itself. If you are one of these believers in that, then maybe what was what Kyle's suggesting here, maybe you want to look at, certainly the puts are rich, so there's richness there, but if you think the upside is underdone right now, we're at shy of the 300 level, haven't been that in a while in Tesla, then perhaps maybe you want to look into that. Let's see, Mr. or perhaps Mrs. Cbade saying here, they're looking to sell, his name we haven't talked about in a while, Ford. Let's see what Ford's up to today. Ford's been having some problems. Today up about 1.5%, trading up by about 970 right now. This person says they're looking to sell some Ford weekly 9.5 puts for 25 cents. My broker says, excuse me, I don't have enough cash in my account to cover a 10 lot. How much money do I need to have to sell 10 puts in a stock? Well, we all know, listeners, multipliers, right? So equity options, 100 multipliers. You do a 1 lot, it's for 100 shares. You do a 10 lot, it's for 1,000 shares. So the quick math you have to do is to sell these puts, where are you talking, 10 handle puts, 9.5 puts on a $10 stock. So you need $9,500 to buy the stock outright. Now, brokers pay, so on the bare minimum, you need to have that. Brokers will play some games with how much they require you to have, depending on your account size. Doesn't sound like your account size is very big, so they're not going to give you that. If you have a lot of account in there and then you can play some margin, maybe they'll let you buy the puts on margin, in which case you only need about half of that. So you're talking about $47.50, so maybe you need that to cover it. So brokers play a lot of games with how much they're going to require. Maybe some of your trading history, how risky you are, could come into that as well. It's kind of a voodoo number that, your option, quote unquote, buying power. I don't know, Mr. Uncle Mike, you're our closest to a broker rep here, having worked at a broker. It's been a while now. What would OX require for this? Would they require you to put the full amount out, or maybe half? What was their deal?
Yeah, so if you're looking to sell a put, first thing, even before I answer this question, understand what your max risk is. So how much will you lose should the stock go belly up? And that would be if it's a 10 lot. If you're selling the $9.50 put and it's a 10 lot, then $9,500 is your ultimate risk. Typically, and so if it's in an IRA, then $9,500 is what's going to be required. Or if it's in an account without any type of margin agreement in it, or any type of levered agreement, because sometimes they're requiring margin even in IRAs now. Don't get me started on that, but if that's the case, then $9,500 is what worst case scenario that they would make you have in the account. Best case scenario would be along the lines of roughly 20% of that amount. So there's a formula, and I forget what the exact formula is, but usually comes out to roughly 20% of what the underlying is. So you could sell those $9.50 puts with roughly $2,000 in your account. Now, keep in mind, the second they start to go against you, if that's all you have in your account, you're planning on getting a margin call very quickly. But if you have that amount, usually around 20% is what they require. Now, in terms of what we would always talk about at the brokerage house, those are typically the people that don't stay around too often, because you get one call against you. And usually people that go that levered typically don't have a lot more money. And so it typically doesn't end well. So I would recommend me personally, I would recommend having at least half of what you're planning on risking in the account. So that way, if it does go against you a little bit, you don't have to worry about getting a margin call.
Yeah, I think 50% is a good level. That's stock margin, so that's something I don't think any broker could argue with that. Good point about the IRA accounts. That is one of the downsides of trading options, primarily in an IRA. They don't play with that levered stuff too well, so that's something to keep in mind. A little bit extra cost of capital doing it in that account right now. So for this case, you're looking to make $250 minus commissions. You got to tie up nearly 10 grand for, say what term this is. I'm looking here at Ford. You're probably looking at a couple of weeks out, so probably about 2 weeks maybe for those. I'm guessing, just looking at prices right here. So if you want to tie up nearly 10 grand for 2 weeks for $250 minus commissions, that just bear in mind the opportunity cost you're talking about with that. Let's keep on rolling on to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we talk about what's on our radar for the rest of this week. We cover a lot of crazy stuff today, a lot of Tesla craziness, so I'm guessing that craziness will be on our radar throughout the rest of this week. Also, keeping an eye on this will they, won't they dance of the market and all things VIX and VXX. I know a lot of you like to play the short vol long game, and that's working out right now. VXX off over half a handle, nearly over 2% right now, 28.78. So well shy of the 30 handle yet again. So let's see. Let's look really quickly, Mr. Meatball, before we get off. Are your puts? Are they bid out? No, they're not. But this good news on Mark. You can buy all you want for a penny right now.
Yeah, the problem is those are all on ones where I have to pay to take the flow. And
that's no fun.
I'm not going to do that. So I already bought some of these for a penny today and got paid on it.
I was going to say $7.50 went up today, so it looks like the Meatball has been busy during the show.
Yeah, just that wasn't all me. But, I still wonder who's selling these because, you're selling them at 0.6 of a cent. I guess if you think they're going to go out worthless, it's a good sale.
I guess. I have a hard time getting behind.
You had to pay me to hit my penny bid. I don't know.
Yeah, I don't. That's an interesting one. Aside from your penny puts, and what else you watching this week, sir?
We have the Fed this week. It's kind of interesting.
What is this Fed thing you speak of?
I know. Not a lot of earnings. Earnings are basically done. I think we got Alibaba this week. That's interesting. That could be of something. That's very China-rific. And then just news flow. News flow is something I'm going to be watching, and let's see where Apple goes from here now that it's topped.
There still are a few more names popping off this week. If you like retailers, big box ones, you got Lowe's and Target on Wednesday. We got Intuit after the bell on Thursday. I forgot to mention all the NVIDIA craziness and what it may portend for the crypto space, so maybe we'll get to that on Thursday as well. Spoiler alert, it wasn't good, at least from the crypto perspective, for the major provider of crypto mining cards, so a.k.a. graphics cards. We'll get to that. Didn't have time to get to that today. Tesla craziness taking up all the oxygen in the room. Uncle Mike, sir, what's on your radar for the rest of the week?
A couple things, but before I get into that, just to add to what I was saying about the maintenance requirements for short puts, the broker can also add to that 20 to 25% number if it's a stock that they deem more volatile. So in case anyone's looking at Tesla out of the money puts to sell right now, I would wager a very large amount of money that you're not going to get the 5-to-1 maintenance.
Someone's calling his broker
Tesla
right
puts.
now saying, Uncle Mike told me I only needed 20% to sell these puts. And
that's probably it.
You can get an angry phone call from a broker.
Just to clarify on that. But, I'm watching to see if we can make new all-time highs. We're really close to it right now in SPY at the S&P and the S&P 500. So wanting to watch to see that. Also, we'll be watching the Fed this week. And just to see what our president tweets out. Also, the summer doldrums, or the time of year where typically we have less volume, is coming to an end. So we got Labor Day coming in another couple of weeks. Kids are going back to school in the midst of football season. This is the best time of the year, folks, coming up.
All right, everybody. That music means, unfortunately, we've done it. We've come to the end of another early edition of the Option Block. Keep that love, keep your questions, keep your comments, keep it all coming. We love to hear from you guys. Before we go, let's go back around the horn one last time. Let's start with Uncle Mike before he gets all the angry calls from the brokers who tells people he could sell Tesla puts for 20% margin. What's cooking in the land of the Fox, sir?
A couple things, and probably in around mid-September, we'll be having an in-office seminar on protecting your portfolio in St. Charles, and also probably in either mid-October or mid-November. It looks like I'm going to be speaking at Duke University, so I'll be in Raleigh-Durham within the next couple of months, and I will keep you guys posted on that. But for more information, feel free to check out my website at stcharleswealth.com.
Check it out. Tell him what you think of the Fox. Do you like it or do you love it? Let him know. stcharleswealth.com to learn more. Mr. Meatball, what's cooking in the land of the pits there while you're not busy buying puts?
I am, we're about to do another Made Easy course. Stay tuned for that. And again, go check out our blog and everything every day. We do stuff.
Option
And follow
Pit.
me on Twitter at Option Pit.
Option Pit. We do stuff. I like that. That should be the new tagline. Check them out at optionpit.com to learn more. Tell them if you missed that guy like I do, tell him to bring him back. He was fun. All right. And on behalf of the Meatball and Uncle Mike and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for joining us at this new earlier time. Hope you guys like it. We'll see you back same time on Thursday for more of the Option Block. And if you're listening live, stay tuned. We'll have some good stuff coming to you later this week. So Tuesdays and Wednesdays, maybe spoilers, some advisors option, maybe some interviews, all sorts of good stuff. Stay tuned to the Mixler, and we'll see you back here on Thursday.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.